In today's video, I want to introduce a powerful indicator on TradingView that helps you to know when institutional buyers enter or exit the market. Definitely you have encountered the situation when your indicator shows overbought condition. For example, you have RSI, stochastic RSI, CCI, or whatever that shows overbought, oversold condition in the market. And especially in lower time frames, you have noticed that sometimes you have overbought reading and you expect that the price, so the indicator are gonna reverse, but instead you have an extended period of overbought and the price just continued advancing and you got confused what is happening in the market. In other times when you have overbought reading, the price usually stops and reverse, whether just a little bit or a larger movement and complete reversal. But we have also times that the overbought reading becomes extended and the price just continue advancing. This is where institutional and large traders entered in the market and pushed the price up. Their extremely large position sizes send the indicator to overbought, but it wasn't an overbought, and actually it's starting off a larger movement of the price. There is an indicator that can help us to know when these large and institutional traders are entering and exiting the market. To add this wonderful indicator to our chart, here we click on indicators and we search Loken. This one, Loken version 4 bullish smart money, which is written by someone named Loken94. Alright, this is the indicator, and as you can see it's added here below the chart. This indicator is built for cryptocurrency market because in this market we can see more of these kinds of manipulation and sudden increasing of the price because of entry of large traders, but it can also be used in other markets like Forex, and this indicator is more suitable for scalping and day trading, so it should be used on lower time frame like 15 minutes and lower. At the moment we are on 5 minutes time frame, and this is the price chart of Bitcoin to USDT. This indicator has two main components. There's histogram, which shows strong buyers activity, and it's the focus of our video, and we have these green and red areas which show momentum. It behaves like other momentum indicators like MACD to show us the momentum changes that are happening in the market. When it's green, it shows the upside momentum is greater than downside momentum, so advancing of the price, and when it's red, it shows that downside momentum is greater than upside momentum, and you can see that the price is declining. We have also a line here which is called trend tracker, and let me also turn on the uptrend. So we have both of uptrend and downtrend, and we have also these signals that are in the form of small green and red dots, and they are actually based on these momentum changes. As I said, our focus here with this indicator is on this histogram that can show us entry and exit of large traders. We have also other momentum indicators like MACD, this one moving average convergence divergence, and you can see that MACD is also showing us the momentum changes similar to this part of this indicator, and even with lower noises in compared to this indicator. So our focus with this indicator will be on this histogram. Please pay attention that this indicator is for identifying buying activity of big players. It shows when they enter in the market and when they exit, so it provides us long position opportunities. As you can see, the histogram is in different colors and each color has a meaning. When we have light blue bars, it's a bullish signal. It shows institutional traders presence in the market and maybe they are buying slowly. When we have green bars, it's a very bullish signal, usually pump candles, and it shows that large traders are buying heavily. When we have these light brown bars, it shows that we have retest candles in the market, natural decline after growth, which is also called correction or pullback. When we have a black bar like here, it shows that institutional traders are starting to exit their trades and they may exiting their positions slowly. And when we have a red bar, it shows sharp declining of the price and it indicates that institutional traders are taking their profits and closing their positions. Please pay attention that the colored bars don't always appear in order, but generally in the ideal situation, it starts with blue and then green and then light brown, which shows correction or pullback, and then again blue and green, or black and then red. So during the correction, we can have red without having black, which shows large traders here in the pullback closed part of their position, if not all. As I said, blue bars show presence of institutional traders in the market. In some cases, like this case, they can be a very good buy signal, for example from here, but in other cases we may have some blue bars and they may also correctly showing some buying pressure, but not always worth of trading. So a more reliable signal here would be having green bars, which shows we have pump in the market and large traders are buying buying heavily. Actually, as I explained at the beginning of this video, these pumpings actually happen when our indicator shows overbought. And two excellent indicators to be used with this indicator are RSI and stochastic RSI. Let me add RSI to our chart. This one, relative strength index, to show you this in practice. As you can see in this period where we have blue bars, RSI was not overbought. But from here where RSI went above 70 and became overbought, we started having green bars. And you can see that this was an extended overbought and the price continued advancing. After this correction or pullback period, you can see that here we have blue bars, which shows presence of large traders, but RSI didn't become overbought. Large traders were buying and the price advanced, as you can see, but it wasn't heavy buying and pumping of the price sharply and sending RSI to overbought condition. And here we have a similar situation, but greater buying pressure, as you can see. In times that the market is declining, like here, or for example here, and also in times that the market is flat, like here, or for example here in this part, you can see that we don't have any bars, because as I said, this indicator only shows buying activity of institutional and large traders. For example, from here you can see that we have a presence of institutional traders and probably they are buying slowly, and from here they started buying heavily and pumping the market. Here the indicator gave us the signal by this black bar that they are starting to exit, and also here it gave us the signal, and here we got a red bar that shows that they are exiting heavily and taking their profits, and you can see how the price declined after that. Actually, having black or red bar tells us that we must exit our long position. Please pay attention that the extent that these large and institutional traders pump the market and keep their positions is not really known, because it completely depends on them. That's why in some cases we have larger movements of the price like here, and in some cases we have smaller movements of the price. But the good point with this indicator is that it also shows us when they are exiting their positions. This indicator is a perfect tool for discovering when large and institutional traders enter or exit the market, but like any other indicators in technical analysis, you should use this indicator in conjunction with other tools and aspects of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.